Hello guys, hope I am not late. I think 4 minutes late, so hope you are here waiting for me. So, as usual, um, we begin. Hello, wise men, how are you? Good evening. Um, I am sorry for last week. I was a little bit sick, so I didn't come. Um, and hope you are doing okay uh, with this market and this weather. So it is all okay here. And as we have seen the market as usual, always, um, always the market is going up and down as usual. There is no new things that that show. So let's see here. So for the third day, the stock market has gone down. It means the only one good day was on Monday, and then everything go down as expected, because as you can see, everything is the same. No, um I was a little sick, so that's why I didn't do the live. It means, I have a flu and some stuff, so I can't, I can just I can speak, but I'm sneezing a lot, and you know that. So it was very hard to do live like that. So that's why I just opted not to do it. But for my videos on YouTube, I continue to do videos, just little video each day. So um, because of the market, because what's going on in the market, so each day I will do a video. That's it. But for the live, I was not prepared to do that. No, for vacation, no. I don't go this time. I always like summer for vacation. I don't like winter vacation. I don't like snow and the other stuff. um Hello Shirley Lewis. How are you? How are you, clown with Twitter? Adam. Okay, I remember your name. Okay, not to say your name. Your YouTube name is very long. Okay, so nice to see you, Adam. Yeah, Adam said, I made some money shorting QQQ, but I lost in RH. Very disappointed. Yes, as you can see, the whole market this week is down, but it doesn't mean, okay? It doesn't mean that every stock in the stock market or every ETF is down. I have seen some that are going up. So the market is not the general market, yes, but specific stocks, no. As always, nothing is absolute in the market. You find some, but you said you short QQQ and made some money, and you lost in RH. You try. Listen, in these days when we have like the general ETFs, all the general ETFs are doing bad. So like when you say I showed them like Dow Jones, S&P 500, Russell, and the other ETFs, they are doing bad. It means you can short them very easily, then to go to another thing. Okay, And you know, trading, you know, as what happened, um, as what happened on Thursday, uh, everything was down in the morning, but later in the afternoon everything goes up again. Okay, so try to make sure not just to leave your short without looking. That's why day trading, you should be there. Okay, you should never leave shorting stocks or going long. If you don't put stop loss, you should watch the whole day. It means where are you in the trade. It's not like swing trading where you just buy, put stop loss, and you leave. Okay, so day trading is different. So you should be there in order to look at what's going on. You said, Adam said, inverse ETF to avoid short squeeze. No, it's everything. On Thursday, as you can see in the market, a lot of ETFs and a lot of stocks have been going so good. Okay, have been going so good in the morning, but at the end of the day, everything goes back as if it's just a normal day. Okay, and for those who shorted, those who are always in the market, they have left already before things come back, because you know, shorting is a big deal. It means there are people who really they short the whole market. It's not a game of mutual funds, because the mutual funds, they don't short. Okay, they don't short. So understand that it's you should always be there, and you should watch the price where it's going. If you see some money, put stop loss where it is there, where you want to exit, and just continue to watch. If we have more money, you just go more and more down with your stop loss. Whenever the market is going up again, you will exit with your profit. This is how things work in the is a good thing to do. Now, hello, Nastulonochi. Hello, he say hello everyone. Bonsoir toujours. Bonsoir Karim. Comment vas-tu? Bien, très bien, merci. Okay, and we have Food Networks. How are you, Food Networks? He said, back is a good swing trade. It means Bank of America. I saw the ETFs a lot, and I don't see that much the stocks. So you say Bank of America. Let's go to the chart. Okay, let's see the chart, and we see Bank of America. No, listen, Bank of America and the other stocks, it did the same. But as you can see, Bank of America is 25. See? Okay. So it was 33 in March. 33.25. It lost $8 from 33. So it nearly lost 24%. It nearly lost 24%. But look here. Look at the thing. For these 3 days, one day, the second day was a gap down, and the third day. So we will see. We will see next week. But all the stocks are the same as this. It means most of the stocks are doing the same. If you are doing a swing trade, so as I told you before, you shouldn't stay that long, okay? You shouldn't stay that long, because few days up, few days down, few days up, few days down. So it's very, very hard to do swing trading, except when you don't stay that much and you look in the morning, and it will be a very big burden, okay? So, how are you, Kamal Ahmed? So he said something about the VIX volatility index. Is there any VIX number that prompt caution for start of market crash? No, listen. Listen, Kamal Ahmed. The volume is a problem. Why it is a problem? Because you don't know what are the shares that are bought and sold. Okay? The more shares bought, the more the stock is going to be up. At the opposite, if a lot of shares are, it means this, what we call always demand and supply. It's very simple thing, but the people, they don't want to understand that it is so simple. They want to make it always very complex. It's not complex. You see the price. You see the price. Why you are going to the VIX to see numbers 8 or 20, and they say, oh, 20 is good or 8 is good. This has nothing to do. Volume is just because of the activity of the trader. It doesn't mean that it is good or bad. What is good and bad is the price. If you buy at 20 and the stock is at 15 right now, you lose $5 per share. That's it. You don't need to look at the VIX or at volume. For me, when I trade, when I do day trading, I don't look at the volume. I don't care about the volume. What I'm caring about is to see the price, where the price is going. Sometimes the volume is so low, but the price is going up so good. Okay, so these things are very complex. So what is the best thing you can look at when you are day trading, or even when you are investing or you are swing trading? It's everything. It's the price, where the price is going. Now, for the crash, it is not yet. I always told you that the crash is when the whole market goes below the support line of 9 February for Dow Jones. And I have explained that many times. These days is going down. We try to see next week. If next week is going down also and it hits the support line and it's going down, the crash is going to be, and it shows the signals. But right now it's always the same as last week and the other weeks. It's just going up, going down. Okay? So Kamal Ahmed, for me, I don't look at the VIX, and I have never looked at it, and I will never look at it. Okay? So these numbers that they give you, use 20 and it is good, use 28, it's not good. This is just, it has nothing to do with your trading. Now when you look, you should look at the price. For example, you are having a stock, you are, for example, selling short a stock. Okay? You begin to see where the price is going from the morning, from 9:30, where it is going. Okay, I will just give you just an idea. Okay, just to understand this, because they always ask me the same question. I will try see this, for example. Okay, I'm just trying to make it simple. So this is the open. Okay, I will make it very big in order to see it. Now the open, what does it mean? It means 9:30, where the market opens. Okay, sometimes when let's say the market opens, okay, at 9:30. Let's say the stock is, okay, let's say it is $20. This is the open. Now for you, the whole day, you should look at this open as very important. Does the stock go down or it's going up? That is the most important thing you should see in the day. Up or down. Sometimes the few minutes, 10 minutes, let's say 15 minutes 15 minutes, or sometimes even 30 minutes. Sometimes they do opposite direction. The market go up a little bit up, let's say to 21, and then it reverses. When it hits this 20, it was 21, and go down, most of the time it is selling short. Okay, most of the time. And believe it or not, when you are a day trader, there is no commitment. It doesn't mean that when you sell short, you just sell short and the stock is going down. It means it's commitment to stay until the close, which is 4 o'clock, 4 p.m. There is no commitment. If the stock stops, go back again and hits again, there is another reverse. So you should be with the big players. Okay, you should be with the big players. Don't be with the small trends in the day. Okay, whenever there is something which is stops going up, and then it's going down. When it's going down, you should short. So are you going to buy at 21 and the stock is going down and you stay until 20? You lose $100 from 20 to 21. Okay, and from 21 maybe you buy, you think that the stock is going up, and then it goes to 20. You lose $100. Now, if you continue, you begin to lose 200, 300, 400, 500, depending on where the stock goes. And you say, let it be until 4 and then I exit. No, this is not a strategy. This is not a strategy to stay the whole day in one commitment and the prices reverses. Okay? This is what I say. Wherever there is something wrong, there is a reverse, you should be the same. Okay, so to do it again, for example, sometimes, okay, the stock opens here, let's say at the $20. This is the open. Okay, now sometimes it goes down. Let's say from 20 it goes to 1950. Just an example, okay? And then you see that the stock stops. It doesn't go anymore. This is the support line. And then it begins to go up, it crosses. Now this crossing, which is $20 crossing, this is your entry if you think that the stock can continue up, it going to 21 or whatever. Some people, if this is big, let's say it is $1, or they can start at 25 cents up. They can buy here, and it's more dangerous, but it's okay. If the stock is going up, you can make some bucks. Now, if it continue, it go down again, and it hit 1950, and goes down again, you think that it is selling short at this time. Okay, so this is just your opinion versus the opinion of the market. The opinion of the market is the price. Opinion of the market, it means majority of the people, because all the people are like you. They follow the opinion of the market, and it is always right. Okay, so don't forget, guys, about the majority, because in stock market it is like a big democracy, and the price is just your opinion when you go to vote. Okay, so it is your opinion, either up, either it means with or for someone or against someone. Okay, so the majority wins whatever you do. Now, how do you know the majority? The majority is the price that you see. If it is going down, it means the majority are for selling short. No, you should not be against them. You should be with them. So you should play the game. You are not here in ethical, what we call ethical game. No. Here you are in a game where the majority wins. So you should be always with the majority. Don't be against them. If you are against them, they crush you. How they crush you? By the price. You buy at 20, you think that the stock is going up, but the stock is going down. So there is a big force going down. So either you comply and you change your direction, or you get crushed. So the people who can't change their mind very quick, you should not do day trading. You should do investing. It's better for you. Investing is you invest for 10 years, 20 years, 30 years for some stocks. That's it. This is good for you because you have a big breath. You don't want to see all these troubles on the market. 1 year is down, 2 years is up, or 3 years is up. You don't want to see all this stuff. So you just throw your money into the market and leave it for years. If it is 1 bad year or 2 bad years, it will come back and you will have good years. Okay? That's it. It is so simple for investing. But for day trading, since it is daily, it is hourly, it is minute by minute or 5 minutes by 5 minutes, you should be there and decide what to do in each minute. Okay? So you should have this mindset, either a day trader or an investor. And don't do like some of these guys. Some they send me emails, and I understand. This is the problem for you guys. Please, if you are doing day trading and you have a loss, take your loss and get out. Don't leave the stock for tomorrow. Okay? So I will just show you again. Okay? I will just show you again my explanation. Okay, so you are let's say you are a day trader. This is the morning. This is the morning, which is the close. No, I'm sorry, guys. It's the open. At least when I just give you these ideas, just to be aware of things and not to do mistakes twice. It's 9:30. The market has been, let's say, $20. It's $20, 25, and the day is good. You see, the day is good. So at 20 here, you go and you buy at 20, 25. So the open is 20. You were just waiting, and you see that the stock, this stock is good. It's going up, so you buy. Now, this stock goes to 2.50, and then suddenly it stops. So the buy is 20.25. It goes to 20.50. It means you see $20 in your account. Okay, you see $25. Okay, and then you decide. You say to yourself, it's okay. And then everything collapses. Okay? Now, when you begin to see that from 20 to 20.50, you have 25, and then here you have 0, and then when you go down, you see that you lost $25, but if you continue, let's say here it goes, let's say it goes to $19. Okay, so you lost $125 for the day, But you waited until, let's say, until 4, which is the close. And then before the close, instead of exiting at any time, you stayed from 25 to 19 and you lost $125. Okay? So you get this idea. You said, oh, I will not sell. I will let it for tomorrow. Now, this is the biggest mistake. This is the biggest mistake. This is because you don't plan. You don't have any discipline. And you don't know even what is day trading. Day trading is, you should respect what you are doing, because day trading is a style. You are looking at the fluctuation of the day. Fluctuation of the day. This is how you make your money. But if you hold the stock for tomorrow after 4 p.m., it means you are holding. Now here you are not doing any more day trading. You are doing swing trading. And this is your big mistake. Okay? Because swing trading is about trends. Now you are not for trends. You are just for day fluctuations, the price fluctuation of the day. So you have done a mistake. Now if you hold, the first mistake you didn't exit. The second mistake is you hold. Now, when you hold, let's say tomorrow it goes from 19, it goes to 18 or 15 or whatever price is going, and you begin accumulating a bigger loss. And this is a real problem for traders. And if you are not disciplined, you will lose all your money like this. Okay? So I just try to mention this. Do not play with this. Try always to be disciplined, always. So let's see the other questions. Kamal Ahmed said, if you say shorting, can I use invert ETFs to do the same shorting of stocks? Yes, you can do the same, but you know, it's not really the same. It's not the same. The same when they give you the same price. Sometimes we have the price is not the same. It doesn't mean where the index is losing $1, this inverted this inverse ETFs will lose $1. It's not the same. Okay, so be careful of that. And in ETFs, always try what does it track. Okay, what does it track? Because sometimes ETF tracks options or cryptocurrencies or futures, which is so dangerous. People, they don't know what is it, and they just, because they say, oh, ETF, it is like a stock. No, yes, it is a stock, but try to see what it tracks. So I will just give you just an example to understand what does it mean, this what it tracks. Okay, so for example, the Dow Jones, the index. Okay. Okay. So the Dow Jones and the ETF that tracks the Dow Jones is called DIA. This is the ETF. So you should know the name, the symbol of this Dow Jones, and you should see what it tracks. It tracks the Dow Jones. So when the Dow Jones go up, you will be making money. Your ETF make money. If the Dow Jones go down, your ETF go down. Okay? The thing is, you should understand what is this DIA tracks. Don't take, for example, let's say this is just fictitious, okay? For example, XMDE. You find an ETF like this. Oh, and you say, oh, this is an ETF. This is an ETF. It's like a stock, so I short it, I go. But try to see what does it track. Sometimes it tracks options, which is very, very volatile, or futures, or cryptocurrencies. Okay? So try to see what it tracks. Because there is one guy, this is very, very bad, but it happens to one guy here. I don't know. He buys an ETF. I forgot what is it. Now this ETF, when he just see it going too good. Okay, when it moves, it is so good. But the mistake is that it tracks what he doesn't know, and he just see that an ETF is like a stock. Yes, it is like a stock, but the most important thing to look when you have an ETF is what does it track. Now this ETF, unfortunately, it was tracking futures, and futures, you know, it is a leveraged. It's not like stock. It's leveraged. It means with a small money, you can make big money. If you are with a trend, you can make big money. You put $3,000, you can make $85,000 in 2 weeks or 3 weeks if you are right, because it is leveraged. So the next day, there is a gap down. It can happen. 90% of his money is gone. He has, I think, 12,000. He put 12,000, maybe all his money. But the next day, 90% of his money is gone. So this is because you go to some ETFs and you don't know what it attracts. Okay? If it attracts the stocks or index of stocks, you will never lose 90% in one day in a gap down. You will never lose that. Okay? So this is just for you guys, for explanation, for those who always use things, especially ETFs. I have a training about ETFs, okay, and you should always know what you are doing with these ETFs. Okay, now we have Adam question. The banks are collapsing due to inverted yield curve. No, man. See, listen. Everything in the market is in a correction. Okay? And the mutual funds, if they want to begin to change everything, they just do whatever they want. It has nothing to do with curves. It has nothing to do with yield. It has nothing to do with whatever thing. See all the market. Beginning of February, if you remember, I was looking at that. In January, they asked people to buy stocks, while the huge mutual funds are selling a lot in order to change. So this has nothing to do with a sector or 2 sectors or 3 sectors. Yes, they will hit some sectors. If there is a collapse, they will be hitting all the sectors. There is no sector that stays good. If there is a crash, right now there is no crash. And when you say and there is you say banks, it's not just banks. Technology stocks have been going down so a lot. Even computers like Apple, social media like Facebook, Snapchat, Twitter, and the other, everything is collapsing. And they lost a lot, not like the market. Because the whole, if you see the indexes, they don't lose that much. According to January, from 1st January to now, they don't lose. They make some profits, but it is meager profits, not big profits. Sinister Investment say you are number one. Thank you very much, Sinister Investment. I'm trying to explain the market and try to give some suggestions with what I know. And until now, everything I said is correct. But when things change, I will change. Because for me, I am with the market. If the market is going down, so how can I say, oh, the market is going up? No, it's going down, it's going down. But Adam said, we are in a bear market because every day is red except for Thursday, and we lost all 2018 gains. Investors are taking money out of US. No. Listen. Adam, were you looking at what I say from February to now? We are not in bear market yet. Some stocks, yes. Some stocks are going down in a bear market, yes. They are on a downtrend, yes. But the whole market, no. Because in order to be in the bear market, what will happen to the market? It should go into the support line and cross it. It didn't cross yet. Now, when you say this week, I'm telling you that the other week was so good. Do you see that? And I told you it's the game of Wall Street. The stocks are going up, going down, going up, going down, because there is a doer. There is someone. I'm not saying someone, but there are maybe thousands. They do this game and they just play with the market as they like. Either you be part of it. If you don't like, get your money out and don't buy anything. That is the deal in the stock market. Stock market is for those who knows what's going on. If you are just in the stock market, you don't know what's going on, maybe you lose a lot of money without knowing. So that's why you should always think about the chart and look what's going on. Now you say to me, banks. It's not only banks. Okay? It's not only banks. If we take, for example, Dow Jones, I will let you know that if the stocks go down this week, it doesn't mean that the other weeks they will go down. Now, if the other weeks go down and we cross the support line, I will explain to you, Adam, right now. Okay? And then I will answer your questions because you put 3 other questions. Okay? So let's you say investors are taking money out of USA equity. Yes, they could. Anyone is free. For example, you have some money in the market. Okay, you get rid of the market. You say, oh, this market this year is not good. I will buy bonds. Okay, just go and buy bonds. So what's the problem? You will not change the whole market because you go, and thousands of investors they go. The most important people when they change is mutual funds. When mutual funds they change all the money to bonds or to other things, you will see that the other bonds they will be in a bull market. All the bonds will go up, so people they go and they buy bonds more, and we have more trading in bonds than stocks. But understand that mutual funds are not going to do day trading. They're not going to buy today and sell tomorrow, or buy in 1 week and sell in 1 week as it's going on. All what is happening is the people who don't know what to do with their money. Okay? This is what happened. Although you see the chart, you see what the guys are doing, but you don't believe. This is the problem. Now I will show you just Dow Jones, what's going on. I have showed you, not last week because I was absent, I didn't come. The other weeks, I will show you. So let's go to the chart again. Now let's go to Dow Jones. Now look, I have made this. I have made these lines. For each 2 weeks, I make a line. I say, okay, the market has been going down into a downtrend. Downtrend is small. It's like 2 weeks or 3 weeks. Now we have 1 week or two going up, 1 week or two going down, 1 week or two. Each week I make a video on YouTube and explain this. Now, then this week is going down. Okay? Now I ask you the question. If this continues to go to the line, as you can see. So let's go back. Yes, we go to the correction line. The correction line here, it is the 9th of February. Friday, 9 February is the lowest this year. Now with this line, which is Monday, 2nd April, but it's not counted because it touches the line, go out, it go up, so it's not counted. So look at what's going on to the market. If you are a day trader, okay, and you just look at how the days are done into a trend, then it goes up, then it goes down, then it goes up, then it goes down. Now it could be next week begin with down and then it goes up again and make this zigzag thing that you see. Or it can go down and down and down and hit. And it hit the support line here, which is the 9 February 2018. This is the bottom of the year. Now this line is the bottom of the year, of 2018 year. Now if the market goes to it and cross it, we are in a bear market for sure. And then if the stocks continue to go down, you understand that we are in a bear market. Right now, we are not in a bear market. You said to me, it's just because Monday was very good and 3 days were bad, so we are in a bear market. No, we have been here last 2 weeks or 3 weeks ago. We have been here before. We have been here before. You see that? You see that in the past? Did you see that? We have been here. 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 Okay? So all these, you said, oh, we are in a bear market. We are not yet. Now, in here, I said we enter to a bull market, yes. But this collapse, it doesn't stay long. Because the guys who is doing this, they don't want that the whole market go up. It's something that it is planned, it is done, but no one knows who are these people. Who are these people who short the whole market? Who? Okay? It's the whole market. So investors, they will never go against themselves. They will never go against themselves. That's why I told you, it's not because 3 days or 4 days down that the market will be in a bear market. We are not in the bear market yet. So just this to let you know that it's not doing good. So another question with Adam, which is Clown Twitter account. He said, if you don't have a big account, how are you going to trade 2 times a day? Now, well, listen. In day trading, obviously, you should have at least $25,000 because they will stop you when you do a lot of around the trade. More than 3, the 4th trade, they can send you a notice and they can block you from trading. This is not because of the brokers. This is the FINRA rules. So if you have a smaller account, I will just explain with at least you will understand me, all of you guys who wants to do day trading. Now now I will tell you why is 25,000. 25,000 is the limit. Okay, is the limit. Now this is what we call FINRA rule. This FINRA is the organization that governs the brokers. It governs the brokers, so it gives rules. Now, if you do, like in the week, we have 1, 2, 3, 4, 5 days. These are the days of the week. Now, so if you do more than 3 trades, okay? If you do more than 3 days, 3 trades, a trade, it means 6 transactions. 6 transactions, it means 3 trades, it means buy, then sell. This is a trade. So 3 trades, 3 by 2, you will have 6 transactions. It means you buy and you sell, you buy and you sell, and then you buy and you sell. Now, if you do this, okay, if you do this, your broker will stop you. Your broker. Okay? It's just because of the law, because of the rules. I'm not saying laws, but because of the rules. Even if you want to trade more and more, he will not let you. He will block maybe your account for 60 days or 90 days, or if you are stubborn, he will block you not to trade. This is not good for the brokers, but it is not the rules of the brokers. It's the FINRA rules. It means these brokers apply what the organization said, because it tries to limit those people who don't have so much money. Okay? So you tell me you can't. So if you don't have 25,000, you have less than that. You can do 3 trades a week. You have 1, 2, 3, 4, 5 days. Now each day in the morning you go and you see if it is a good day, you go long. If it is a bad day, you short. When you do a trade, you do, for example, the second here. Now, let's say Thursday is good. You do a trade here and then you stop. And then you repeat this next week. This is to avoid that your broker will stop you. Now, this is one thing. This is one problem. There is another problem that some people, they don't know. Some people they know, some people they don't know. Okay? So there is another problem. I will just explain. Okay? And I will give you one example to make it sure you understand. Now, let's say you have only $5,000 and on Monday you do a trade. So you buy, then you sell. Now, when you buy and you sell, especially when you sell, you should wait. Okay, 2 days to get your money back. To get your money back. Before it was 3 days. Now it is 2 days to get your money back. Okay? So, except when you have, since you are doing going long, going back, if you have a margin, it will be better, because they can let you borrow again money before the money is back to you. Because understand, this is something traditional. When you sell something, you sell shares, you will see money in your account, but this money, you are not allowed to use it until we have 2 days. Now it becomes 1 day. Now what does it mean, 1 day or 2 days? I will give you just the example to make it sure you understand. Okay, so let's say you do this transaction. This is the only money you have is 5,000. You buy and you sell. Let's say you make money or don't make money, it's not important. You do it on Monday. So now, before it was you should wait Monday, you sell, you should wait Tuesday, Wednesday, and then Thursday. This is the past. Thursday, you get your money back and you trade again on Thursday. But there is a change in the market, and since you do the trade on Monday, so you got your money back on Wednesday. So Wednesday you can do another trade. Okay, Wednesday you can do another trade. It's just because of this. This is called money settlement. Money settlement, it means the money is not, because when you buy and you sell stocks, the owner changes. The owner, it needs time to owner. You have been the owner in the morning, but in the afternoon you sell, so you are not the owner, so there is someone else who is the owner. So for this you should wait 1 day. So you buy and you sell Monday, on Tuesday, on Wednesday you can buy and do it again. So this is another problem for you guys who have small things. Now, why some people they don't like this problem? If you go to forex, okay, if you go to forex, it means currency pairs. Or you go to futures, okay, or you do options, okay. So especially when you do this forex and futures, these two markets, when you go to them, there is no what we call a money settlement and the other stuff. This is done directly, so you can buy and sell whatever you want. They don't stop you. So for those, sometimes so those people who are day traders, they go to forex or they go to futures. Futures, like forex, they are leveraged. It means you put only little money, but if you don't know how to trade, your account can be wiped out in few minutes. So you should be a good trader to go to forex or to futures, especially futures, because it is more professional than forex. Okay, so these two things you should be aware of. At least you have IDs. So as I told you, Clown Me Twitter account, or Adam, those who want to trade a lot, you should have this $25,000, and you can trade whatever you want. 1 time, 5 times, 100 times. they will let you do it. But this is just the rules. So it's not the brokers who make the rules. It's the FINRA which makes the rules. And if a broker doesn't do that, they will stop the broker. And the brokers, it's against them. You know, the brokers want everybody to trade every minute in order to make money, because they make money from commissions. Okay? They are not going to trade in the market. So the people trade and they get commissions from the market, from these people. You see, SVXY was gapping down, shorting by institutions. Now, listen. When you short because of some news or something, it doesn't matter who is the short seller. It doesn't matter. Why it matters for you if it is institutions, or it is you, or it is another guy, or it is a bank, or it is a broker? What does it do for you? It doesn't matter. So I will just see this SVXY. No, listen. Okay. So as you can see, Pro shares short VIX short VIX short-term futures. Now here you are dealing with futures, short-term futures. Understand that you are not doing stocks. Be careful of this stuff. And where is this gapping down? I don't see any gapping down. Where? The SVXY, it's like the Dow Jones. See, it's the same as Dow Jones. Where is this gap down? It's the same for all major indexes. It's the same thing. So there is no what we call gap down. There is no. It's just the market is very troubled. That's weird. That's it. Okay. Now, and you said from 85 to 12, he was crying like a baby. Now, who is he? Adam. You are speaking about the stock SVXY, and we see it. There is no this prices. So what is this stock you are speaking about? This 85 to 12. I think you have written you didn't spell the gapping down stock that good. SVXY, I have written it, but can you check it? Adam, can you check the symbol that you give me? It is not from 85 to 12. It is not. So please check and let me know, because it is not what you say. SVXY, it's an ETF about futures, but it is not 85 to 12. Maybe you have been mistaken. Hello, free trader. How are you? And you said he was crying like a baby. Who? It means I don't know what are you talking about. Okay. Now, let's see. Excuse me. For the major indexes, I have explained this before. I will explain again and again what did happen. Now you see the Dow Jones. It is the same play. If you go to my videos, you go at when I talk about the major indexes, it's the same thing, going down in a trend. So this is like 1 week, 2 weeks, like 3 weeks going down. See? 3 weeks going down. And then 2 weeks going up. Then 2 weeks going down. And then 1 week and a half going up. And then 1 week down. It's the same thing. Happened this again and again. Now, if you go to Russell 2000, it's the same thing, going down, up, and then down. And I have told you before that it might be going down and it will be the same. S&P 500, it is the same thing, going down, up. Although S&P 500, we have 500 stocks, but they are doing the same as 30 stocks, okay? Is the same as 30 stocks. And S&P 500 and Russell 2000 is the same. But Russell 2000, it was doing so good before. It's better. The small stocks were doing so good before, but now they do the same. Now understand that Russell 2000 is near the, here, is near the low of the year. This is the low of the year. You can remember? The low of the year. Here, on the 9th of February. Now we are near it. So next week or the other week, before 2019, if Russell 2000 collapse, or maybe the other major indexes will collapse. Okay? But until now, it is not. So we are just looking and watching the market. Hello, free trader. Thank you very much for coming. Now, Jesus Miranda, how are you, Jesus? He said, hey, any thoughts on BKE? BKE, buckle. Okay. So buckle is specialty retail sector, apparel stores. Okay. Now, if we bring the where is the yes, if we bring, let's say here, okay, so this stock doesn't follow the market mood before, so it go down. Just I will give you what did happen. Let's begin with 29. Yes, let's begin from here. Here we are looking at what's the correction that we had before. 6, 7, 8, 9. It doesn't work like a. But listen. In order to compare your stock with what the market is doing, let's say do this and do this for all your stocks, just in general, to get an idea. Okay, before we go to do that, you see that this stock, the high was 29.65, and then it collapsed from that time. It goes up and then it collapses again. So if you want to compare this stock with Dow Jones, for example, the index, just to see what is your stock doing compared to the whole market, you do setting, you go to comparisons here, you go to the DJ30, which is Dow Jones 30 stocks, you click that and you say okay. Now the BKE, it was doing so good before, like here, like in March 26, March 2026, And you see that your stock from March 26, it was doing good till June 21. So all this was a good trend. See, it was an excellent trend. And then we have another trend going down. Then we have another trend going up. This is the last good trend, and now your stock go down. Okay, you see? Now, if you compare with Dow Jones, because Dow Jones gives you the average, so you see that your stock from this day, which is the 24th August, your stock collapse on this day, 24 August, Friday 2018, and you see how it collapsed, and it's going down, going down, going down, small trend up, and then going down, going down. Now, the problem here is you look if your stock is, according to the market, is going to be going down and down and down and down. Okay, so this is the problem. And understand that the whole market is doing bad. So most of the stocks will continue to follow the general mood of the market. So your stock has, let's say, a good small trend here, but it continues to go down, and this is the big trend. It's going down, going down, going down. So try to check. You can do another thing. You can go to specialty retail, apparel stores index, and see how things work. For example, I will give you this example. So if you go to my to the chart that I use here, because it will help you, you can compare. Let's take this comparison, because we are not going to do Dow Jones. You can compare your stock with the index, which is apparel stores. Now, if you don't know how to do it, I will show you guys, you and the other guys who you have never used this ETF, this chart. You can download it. It works only with Internet Explorer. I can give you the training. You can get a training for free, and you can check it. Okay. Now, how do you find this apparel stores index? Specialty retail here on the top is the sector. So you go here under this blue line here, and you go down until you see specialty retail. You go down, and you will see specialty. We have gone, okay. Yes, you look here on the left side, specialty retail. This is the sector that your stock is there. Now we have many industries. So for me, I will show you all the industries. At least in the future, you should just go and check. Okay, we have gone to them. Let's get yes, apparel stores. So apparel stores, 22 August. So it's nearly the same. Your stock, we said it is 24 August. It's the same, and it's going down, as you can see. It go up again, and it's going down. So if you want to compare your stock in only these apparel stores, only you can check the other companies, and you check and you compare them. Is there any other store that it is better than your stock? So what you should do, you go back and then you go to specialty. Yes. And you go to only to apparel stores and you click that. Apparel stores, you click that. Now this is, when you click that, all these stocks are into apparel stores, and they compete with your company. Okay? They compete with your company. So what are these stocks? You have Children's Place. It has a gap down, so it's bad. Ross Store, it's doing too bad. What does it mean when you see all this? It means all this industry is doing so bad. See? Children's Place, Ross, Nordstrom, Genesco, Inc., Michael Kors is doing also so bad, because you see it's a big downtrend, you see. All this retail is doing bad, as you can see. Your stock buckle. Bad. Okay, all these stocks are doing bad. It's just because the market is doing so bad. Okay, so this is just to Jesus Miranda, understand that the whole market is not doing good. The whole market. If you are going to invest for the long run, it means for many years, for many companies, you should wait until we see where the market is going to be. Is it going to be a bull market in the future, in the maybe 2019? Or is it going to be a bear market? Okay? And this, what I always teach here. I teach you how to know and what are the strategies that you should do in both markets. Right now, it is very difficult. It's just because the stocks are going up and down. Now, I understand it's so difficult. So most of the students Jesus Miranda, let me finish this and then I will explain to you. I will explain to you how the profits are got from stock market or trading or whatever. So for the people who are investing for the long run, you should wait until you see a signal where the markets are going. Okay? Now, for you guys, let me give you my email. Okay? So for you guys who are here, they always know my email. They are all in my videos. And here is my website. There is the free training if you are interested just to get it. So for you guys who are new here, maybe. Now you will find the chart and how to use the chart. There is a free training in my website. You just go to my website. You will find the free training. You just get it and try to use my chart. At least if you follow me in the future, it will be easier for you to understand what I'm saying. So there is a free training for the chart, and it works only with the Internet Explorer. And it doesn't work with other things. Now let's go to Jesus Miranda question. It says, thank you for the analysis. Is there a certain profit that you have as a goal daily? Now here you are thinking, let me just try to explain the profits. Okay, I'll try just to explain. So what we call, he said, the daily goal of profits. Now, so this is what you are thinking about in trading. You are thinking about daily goal of profits. It means how much you make in the goal in the day. Now, if you are thinking like this, you think that day trading is like a job. It could be a job, but since it is not, you don't know how much you make. How can you have a goal where you don't know how much you make? Now, if you have a day job with an hourly rate. Now, let's say, just an example, okay? Let's say you make $20 an hour. Okay? Let's say you multiply by 5. You have $100 a day. Just an example, okay? As profits. But this is when you think that day trading is a job. Now, day trading is not a job. It's a business. Now, this business, you will never know how much you will make, but you will know how much you want to lose. Now, this is called risk. Now, you as a businessman or as a day trader, you should think about your risk. You should limit your risk. Limit. It means don't lose too much. And leave the profits, because business, you are not going to be paid by hour. Maybe you work 30 minutes, you will make $3,000. Okay? As profits. Just you enter a stock, it is bad news, you sell short a stock and you make money. And this business, so the goals, you can't quantify the goals because it is a business. You will never know. So what is the thing that you focus when you begin practicing day trading? Is you think about the limit, you think about your risk. For example, you said to yourself, an example, okay? So I will just give you an idea. Let's say you say, my loss, or my risk should be, for example, $100 a day. I shouldn't lose more than that. This is your risk. Now, profits for you, it should be unlimited. There is no limit. Unlimited. Why you should have a goal for profits? Profits, leave them free. Maybe one day you have $100. The second day you have $2,000. The third day you lose, for example, let's say you lose $100. The third day you lose $100. The fourth day you lose $100. Let's say the sixth day you make $500. You make $300. You make $50. So what is the thing that you see, that you can focus on this thing? Because the profits are unlimited, they should be whatever the market gives you. Sometimes it gives you $100, sometimes it gives you $50, sometimes it gives you $2,000, sometimes it gives you $500, $300, sometimes it gives you zero. You go to a trade, you make some money, but you lose it, but you exit, and you have zero in that day. So this is the business. This is the business of trading. Now, there is another thing that makes this is how much money you have in your account. In your account. How much money you have? Do you have 5K? Do you have 50,000K? Do we have 100,000K? So this makes your business either bigger, profitable, or no. But my suggestion, okay, my suggestion is always think about the risk. Don't think about the profits. Think about the risk first. Now, if you make money, let the money be unlimited. You don't know. Don't stop. For example, you say to yourself, let's say you take this example. Okay? Let's say you say, oh, I need to make $200, but this profits $200. What if you make $2,000? You are going to exit when it is $200 and you leave $2,000, especially when the day is good. let's say the day is too bad. It is too bad. It is red, and you begin in the morning with a stock. It was, let's say, it was $10, this stock, and then you begin to sell short, and then it goes down to $5. So, are you going to just stop from $10 to $8 and you make $200? That's it. This is what you are. This is what your goal, and then you say, "Oh, I'm good." This thinking will not make you a profitable trader. A profitable trader is the one who let the market gives you what it gives you. The profits is given by the market. Let the market rewards you. The market rewards you. If you are good, you will be looking at good profits. Now, you are not going to have all your trades good, but whenever there is something bad, it should be, for example, $100 a day. You shouldn't risk too much. You risk, for example, 1,000 a day. If you risk 1,000 a day and you have 5,000K in your account, you blew your account in a few days, and then you have zero in your account, and then you stop trading. So this is not how to trade. When you trade, you should look at the risk. Don't look at the profits. The profits comes by themselves. And don't stop your profits to a percentage, because there are some people who tell you, oh, for example, if you make daily, for example, if you make daily 10%, stop, exit, and that's it. You should not follow people what they say. follow what the market gives you. Now, if the market, if this stock goes 50% in that stock, it was $10, it go to $5. Why you should stop at 10%? Okay? Why you should stop at 10% in your profits while the market gives you more? So the market decides your profits. It's not you. But the risk, it is you that you should do this. The market doesn't tell you how much risk you should do. It's you that you should do. It is your job. Your job is to limit your expenses. I will give you an example. For those who don't understand what I'm saying, I will give you a real example. That's why, okay. A real example. Let's say you are making $3,000 per month. This is your income. You have a job, for example. Now the expenses. Okay? Here we have the savings. Now, you are making $3,000 for a job, a monthly job, either salary or hourly. It's 4 years and always you get. Now, what are the expenses? Can you make, for example, $4,000 expenses? It means you are spending more than when you earn, spending more. And instead of having a saving, it means you save some money for the future, for your future. You have, because you don't spend too good, so you are going to have interest rate, and you have another problem with expenses. So in expenses, it is you that you should decide things. Expenses, it's you that you decide. So you should limit your expenses. Now, when you limit your expenses, let's say $2,500, all your expenses, everything. Now here in the saving, you can save $500 a month. And this is what makes your wealth in the future, because you are saving money, and then this 500 with 500 with 500, and then you can make a lot of saving, and then you can do whatever you want. You start a business, or you buy stocks, or whatever you want. So here, how you manage your money, So to limit your expenses is like the business when you are doing trading. You should limit what you are spending. If you don't limit, you will be like 60% or 70% of Americans who are making more expenses than what they got as money. And that's why we have interest rate, and then they become broke. They become broke because of their management. They don't know how to manage the money. Okay? If 3,000 is not good for you, you should get some education, or get some other good jobs, or do second jobs, or do whatever you want in order to make this 3,000 more. Okay? So that is just a general idea. And this is a personal finance, just to give you this idea. If you have questions, you can ask. Okay? So my idea is that in trading, look at what you want to risk in the trade. Whatever money you put, it's your job to limit. Because if you leave the stock from the morning to the afternoon, and you say, okay, the stock is going down, I sell shorts, and okay, I go shopping for 2 hours or 3 hours, or I am going to the gym, and when I come back in the afternoon at 2 o'clock or 3 o'clock, I will look at the market and see how much money I make. This is not trading. This is not day trading. Day trading is a business. You should be there. You should be looking how much you lose. If you are, for example, if you are making money and you see it's a good day, you can buy more and more and more. It's a good day, either selling short or going long. This is how the people, they make the money, especially in big days. Now, when you see the big days, like let's say, for example, on Friday or on Thursday or on Tuesday last week, where the market is so bad, it is red. But understand that short sellers are making that much money. It is their good days. And while you think it is bad days, other people, they think it's good days. So this depends on you, where you are. Are you with the winners or are you with the losers? And the market is the same. It doesn't change for hundreds of years. I don't say thousands of years, but for hundreds of years, the stock market is doing the same thing. You should go with the winners. You should not be with the losers. The day, if it is a short selling day, you should short sell. If you don't be in the market. It's as simple as that. Now, if it is too risky for you or you don't know, you should study, you should practice, you should get techniques of day trading, and you should practice. Now, when you practice and you be good, you will be like everybody else. You will be making money and you will be following these red days, and you are happy to see a bad day in the market. Okay? So it's just the opinion. It's just the opinion. People who put stocks to go long, and we have bad days like last week, they are frustrated. They lost a lot of money. Okay? And then you see other people who have been selling short daily and they make money and they are happy. So although two people are in the same market, someone is happy, someone is sad. Why? It's just because someone understands how the market works, the other doesn't understand. He still hopes that every day will be going up and all the market will be good, and we will have never a bad day in the market, and that's it. But real thing is totally different. So either you change, you adapt. It's like putting clothes. When you are in summer, you take off clothes, a lot of clothes, because you don't need them. You don't need a lot of heat. It's the weather is so hot. You don't need to have jackets and the other stuff. You understand? But when you are winter, you need to have a lot of clothes because it's cold. It's just a natural thing. A natural thing. When the market is red, you sell short. You don't know, you should study, practice. No one is getting information or know something without practicing, without learning. There is no one who does that. All the people lose money when they begin, and some people, they succeed because they know, and other people, they don't succeed because they don't know, or they don't know how. Okay? So this is about day trading. Day trading is very simple. The market is either up or down. If you see the whole market green, you can go to any stock, you find it green, you buy it, you can make some bucks a day. A day that it is all the stocks are red, you go to any stock and just you sell it short for a few hours, 1 hour or two, you make some bucks, that's it. What I say is simple and easy, but it needs practice, it needs techniques, it needs a lot of stuff that the people, they don't want to do. It's a business. Wherever business you go to do, there is frustration, there is stress. Sometimes you lose a lot of money, sometimes you make a lot of money. This is the market. And every business has some frustration, some stress. It's just because of the business. That's why a lot of people, everyone in the world, they don't want to do a business. They want to do a job. You wake up in the morning, you know how much you will make if you by hour, because your hourly job. You want to do your job at 5 o'clock or 6 or whatever is your shift. You go home and you have no problem, because you do your job, you get your money. But in a business, it's not the same. It's not the same, because we have a lot of frustrations. We have a lot of things to deal with. You have a lot of decisions to do. That's why people who do business, they have a lot of problems, but they can make a lot of money. Now ask yourself, any one of you guys who work or who has a business, or you will see that making the business ideas, you can make money, and because you like this stuff and you like to solve problems that you have in the business, and that's it. So day trading as a business, it is the same. Okay? It is the same thing. So as I have explained about the market, next week or the other week, we are at the end of 2018. You will see if there is a big change in the market. If next week is all up, it means we are still in this playing. If the market collapses next week, for example, it collapses and goes down, and we are in a bear market, and you will see that. Okay? You will see that. It's so simple. And I have showed you how to look at the general indexes. We have a lot of ETFs. You can check. ETFs are not the same. Some are going up a little bit. Most of them are going down. So you can work with my chart, and I have put a link for those guys. You can go to my website. There is a free training, and you can study how just to set up this. You can even trade using the chart. I have used it before to trade, and it's not a big deal. Okay, it's not a big deal. It means it's just a chart. But if you are doing day trading and you have a lot of money, you should see another better chart where it gives you the ability to do the trade from the chart, which is better if you want to. Some people, they like that. Some people, they don't like. They like to have their broker, because the broker is just to buy and sell. Most of the charts that are in the broker are not good. Most of them. You can't make lines. They are not interactive. They are bad. But the good thing about my chart, if you can use it in day trading, although it is not robust, but it has good features about putting lines, because the line, you can see it. Okay, so I will just I have showed before from the training how to use these lines in order to trade, which is so good. So I will give you just an example, just how to do the thing. Okay, this is a very simple thing, because the chart gives you. Now let's say this is the open, because I always focus on the open. The open is the most important thing in day trading. 9:30, you should see where the market is going daily. This is the day. This is the day. It could be up or down. Now let's say it opens, an example, it opens at $20.21. Okay, it opens like this, it goes up, it begin to go up with candlesticks. Now you can choose any time frame. You can choose whatever time frame. Let's say you take 5 minutes. 5 minutes, it means each candlestick is 5 minutes. Now let's see, you see that the stock is beginning to go up very quick. So here you can make a line. Let's say this is $20.35. So it opens at $20.21. Now it is $20.35. Let's say you buy here. Now, whenever you buy, let's say the stock begins to go up good in the day. 5 minutes is going good. Now, whenever you buy, you should see immediately where you exit. Okay? Let's say you put 19.95. Just an example, okay? This is your stop loss. Stop loss. Okay? Now, why you put stop loss? Because you want to know your risk. Now, from 35 here, you bought 19, you are risking $40 if you buy 100 shares of stock. 100 shares of stock. Your risk is $40. Now, if the stock continue to go up, let's say it goes here. Let's say it goes to $21. So from 35 to 21, 61 cents. It means you have made $65. Now, but you are not going to, just because you make $65 in this trade, you are just going to quit and exit here. You should continue with the day. It might be going to 21, 22, 23, depends on the day, and the more you stay, the more you make money. Now, if you see the stock is continuing to go up, you can buy more if you think that the day is strong. Instead of buying 100, you can buy 500 shares, depending on the stock, depending on how much money you have. And instead of making $65, okay, you can make 300, or you can make 500 or 700, depending on how much money you have, how many shares you bought, and how strong is the day. How strong is the day? Now, if things go worse and you buy 100 shares, it goes down, it hits your stop loss, this trade is a loser. It's not you that you are a loser, but it is the trade that it is a loser. You can make another trade. Okay? So try always to make a plan. You buy a stock, you follow it, you make money, you stay. You don't make money, you exit. That's as simple as that. Okay? So today I see a lot of questions at the beginning, and now all are sleeping. I see no question at all. So I know this day was a bit rough for the people who buy just the stocks and wait they go up. So the week was so bad, it means it's going down. But understand that you should look at next week. If you have stocks and things go worse and you see that you lose too much, don't wait until you have 100, 200 loss. It becomes 1,000, 2,000, 3,000 loss. And what if the market collapse and we are in a bear market? So you should change your strategies. You can buy put options. You can do some kind of ETF. to short the whole market, or you can just day trade and sell short. You can do a lot of stuff like this. Okay, so try to adapt to the market and don't be stubborn with one way. Always you buy and you think that the market will go up. This is a strategy, but it doesn't apply to all days, all months of the year, and if the market is too bad. Okay, so I will be waiting for you guys. So Jesus Miranda said, so after the stock went up for the day and you are on the green, how long should you hold after it drops before selling? Now, Jesus Miranda, you can check training level 6, which is how to use the stop loss. Now, the stop loss, you have techniques. You should see yourself how much you want to risk in that trade. It's you who should do this according to certain rules. Now, if you have never seen my my training or so, either you should go to training level 6, which is how to it means how to use the stop loss, and what are the criteria that you should use, what are the guidelines. You should see this training. Now, if you want to just to do golden subscription, it's better because I will give all information about everything, and you will find 13 training levels. You should do the golden subscription. Okay, so the golden subscription gives you 13 training for free. Okay, 13 training. We have swing trading, we have day trading, we have how to follow the trend, how to follow the day. So these are techniques that you should learn and practice in virtual, and then you can do to your trades. And believe it or not, you should the whole picture, because when you don't know these things, you will begin trading, but you don't know how much you risk. You don't know nothing. You just trade, and the stock is going down against you, and you are going long, and then you begin to lose a lot of money, and then you just decide one time and you exit. So this is not a plan. Each plan, okay? So each plan has something to do with your own risk. There are things you should do even before you buy a stock. You know how much you risk. As I showed you just here in the explanation, I told you if you risk $40 or $100 or $70, this depends on how much money you have, on how much money you put in this trade, on how much percentage you want. All these will be explained in that training. If you are interested, you can get that training, or the best thing is you get the 13 training for free. It's better to do golden subscription. You stay 1 month or 2 or 3, whatever you will stay. You just learn, understand, and you got the lessons, you got the everything, and then you begin to have a clear idea what you are going to do. Okay? If you are going to do day trading, you should concentrate on day trading only. Don't do swing trading, which is training 11, training number 11 and 12. This is about day trading and selling short, how to sell short and how to go long. Okay, and you can begin with a free training if you want. If you have never seen my training, you can go to the first training in my website. You click that and you check my first training. If you like it, you can subscribe or you can order some stuff. And all what I do is with the price. I don't use indicators or moving averages. It is so simple when you begin to learn. It is so simple things. All the beginners they like what I do because it's so simple. You know, you don't have to look at the companies, to waste your time, hours. Just you look at the price and work with the price. It means follow the price where it goes. If it is red, you sell short. If it is green, you go long. That's so simple. But what always you need is you need to learn and practice. Even if you want to practice on virtual, let's say you want to practice in my chart. You can do the chart. For example, I will give you, for example, an example from the chart. Okay. Now, let's take any example you want to do. So 102.28 is the close of today, Friday, for this stock. So next week, you will never know on Monday if it is going up or going down. So whenever it opens, you go here. Okay, let's say I will give you better stock. Okay, we see Twitter, for example, it is 32.83. Now, you should see the day. If it is good, let's say it opens here. Now, when it opens, let's take this. Okay, let's say it opens here at 33 something, 33.13, for example. You put it in red, in green. This is where you bought, and then you see. Let's say if you take 5 minutes. This is 5 minutes of the stock. You can see the whole day. Here is the whole day for, as I told you before. So I will make this example is better. So the open. Now here, the open was 32.84. 32.84. Listen, this is the open of that day. The day is Friday. Okay, so here we are on Friday. Today. It opens here, it goes down little bit to 32.72. It means it goes about 12 cents down, and then it goes up again and it crosses. Let's say you bought it here at the open. The stock is going up, going up, going up. It's making money until 34, 32. Okay? So it goes nearly $2. This is where is your profit. You don't have to make $2 from the beginning to the end, but whenever you enter and whenever you exit, let's say you are waiting, you bought here and you are going, and then it goes here and it goes down, and then you put your stop loss, because stop loss changes. Okay, stop loss was here before. For example, when you bought, you put stop loss here. If the stock is going up, you change the stop loss always. Each 10 minutes, 20 minutes, 30 minutes, you are waiting, you change. The stock market is going up for this stock. And then you see it stops, it's going down. Let's say you put it here, and then you exit automatically. So this is your trade. Whatever you make is good. But you shouldn't wait until the end of the day, and then all your profits have been lost. So that's why we should use this stop loss, and you follow your trade. This is how a day trade is done. Okay? So you can go to my charts, and it gives you the setting, and you can do and you can use 5 minutes, you can use 10 minutes, you can use 2 minutes, you can use whatever minutes you are comfortable with, but understand that 1 minute is very, very rapid. It's very, very quick. For me, I always like 5 minutes. I always like 5 minutes. Okay, 5 minutes is good. Now, if you see the 6 on Thursday, Twitter was going down. It opens and then it was going down, going down, going down, going down. So this is the day to short, as you can see, and that's it. So all these things that I am showing, you need to practice. There are some techniques, very, very simple techniques, that shows you what is the day. Is it red or is it green? If it is green, at the beginning, you should see if it continues. Now, no one knows if it continues to be green or it changes to be red. So, whatever is your opinion, you should base yourself on your opinion. Don't see anyone else. And look at the price from the beginning until you exit the trade, and by this you are doing this, you will be a very good trader in the future if you continue looking at the price. And you can see in the morning if we have good news or bad news, you will check them in the stocks before they open, and then you can see. Sometimes we have good news in the morning, and you will see that the market is all green. Most of the stocks are green. You can buy also ETF. You don't buy a stock, you can buy an ETF, which is an index, which is tracking an index, and that's it. So I think we are at the end of this session. It's nearly 2 hours. So please follow the videos I'm doing, because sometimes I give information when the market is whatever is the market is doing. Sometimes I give lessons, so wherever you watch, you get some information. If you need me or you need to have a question, please send me an email directly to my email, istockmoney@yahoo.com. You can see it right here. If you are new here, you have never been here, you can check my website and you can get the first training, and you just try to learn each day something new, and that will be very good for you. For the market, so on next week, as usual, I will always make videos to speak about the market, or to speak in general about the mood of the market. We are not yet in the bear market, we are still in the correction, although these 5 days were red. A lot of short sellers have been making a lot of money, and as I told you, some people are crying, as Adam said, and some people are laughing and having fun. So those who follow the market, they know how to trade, they are always happy. Those who don't know, or they have one unique opinion about the market, one time they will fail because of that opinion, because it's always your opinion that counts. It is, whenever you take a stock, you should look at that stock. You can see the whole market, what it's doing, and see your stock if it is doing the same. Okay? Sometimes we have opposite directions, but it's okay. You always focus on the stocks. You can even make, for you guys, you make a list of stocks that you want to trade. They move too fast. You can put them in a portfolio in my chart, and you can each day you can see them where they are going, and you can buy according to your money. For example, if you like to buy stocks that are $10 or $20 or $50 or $15 or $7, try to keep with that, because there is no need. If you have $2,000 and you go to buy a stock that it is $100, you will never make money like this. Okay, even if it moves good, you are not going to make money because you buy few shares. Okay, and this is not good for you. So in order to make money, you should buy many shares, and if the stock is small, if it moves 25 cents or half dollar, you can still make money, although the stock is small. Okay, so this is the end of this session for today. Thank you very much for watching, and always look after my videos. If you have a question, always send me an email. It is better than to comment on the video, because sometimes I don't look at the comments since they are a lot. So the best thing to contact me is to use my email, or to go to my website to find the email, or to each video. Okay, so hope you are doing well, and please enjoy your weekend. Oliver Blair, merci beaucoup. Thank you very much for watching this video. Thank you very much. Thank you very much, Nas de la Noche. I will try to maybe, I don't know, you are not Spanish, but I will try to learn Spanish. Spanish is good. Now, and thank you very much for watching. And if you have questions, as always, ask me. And see you next week. Thank you very much.